We're going in with the expectation of a hat trick, with the Reserve Bank's Monetary Policy Committee expected to cut rates for the third consecutive time. Now, inflation is tracking well below the RBI's 4% target, and the first quarter numbers are also likely to undershoot the forecast, and so it'll be very difficult for an inflation-targeting central bank to not deliver a cut. Now, while 90% of our respondents to the poll expect a 25 basis point cut in this policy, a smaller section believes a large 50 basis point cut could boost the credit cycle and lift sentiments. The repo rate currently is at 6%, and that is expected to go down to 5.5% in this rate cutting cycle, and that will mark the shortest and the shallowest RBI rate cutting cycle that we've had in over a decade. But a smaller section is expecting the terminal rate at 5.25%. So overall, the market sees space for another 50 to 75 basis points of cuts from here on. Now, most expect RBI will stop the rate cutting cycle by December. Some are even expecting that to happen by August. The GDP forecast for the year, that is most likely to be left unchanged at 6.5%, even as RBI takes note of some of the risks from rising global trade uncertainties. On the inflation front, though, a revision is quite likely, with CPI inflation under 4% for 3 straight readings. A majority of the respondents to our poll expect RBI to lower the FY26 forecast from 4% by 10 to 20 basis points and possibly more, which will support future rate cuts. As for liquidity, most feel RBI has already done enough, and with that record high dividend, core liquidity is expected to stay in surplus in the coming months, so don't expect any big action on that front. But here's what else to watch out for. Any tweaks to the liquidity management framework for one, and there's also been some chatter whether RBI may introduce the external benchmark linked rate, or EBLR, for the NBFCs as well, to ensure that there is better rate transmission. And of course, the street will watch out for commentary on the global macro outlook and how that might affect India. So bottom line is, this is a policy where RBI's rate cut could be predictable, but its guidance and other measures will be what the markets will look at very closely.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.